takes pleasure in attracting a stellar list of speakers that address today's most relevant issues. The club's place as a refuge for rich discussion and networking has never wavered after 123 seasons.
We are dedicated to encouraging debate on the issues that matter to this city, this province, and this country.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts, and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Hello, and thank you for joining us. My name is Joseph Lowe, President-elect of the Canadian Club Toronto for our upcoming 21-22 season and partner, PwC. As the CPP Fund nears the $500 billion milestone, we're joined by John Graham, the newly appointed President and CEO. John joins us today to discuss how CPP Investments will grow and diversify the fund in the years to come, investing in the energy transition and leading remotely during a pandemic. Now, before we hear from our speaker, here's some information about how to participate with us. The click here to switch stream button helps if you find your internet is slow. The video quality may decrease, but the audio quality should remain strong. Once you click the questions tab, you can enter your questions in the window and they will be sent to the moderator. The request help button located in the bottom right corner of the page is there for technical support. Thanks to the generous sponsorship of PwC, today's conversation is free of charge. We are grateful for your support of today's discussion. The Canadian Club is a nonprofit and we have been gathering people together for 124 years. It is because of our sponsors that we can continue to do that. After making opening remarks, John will be joined in conversation by Amanda Lang, anchor and reporter for BNN Bloomberg. Now, one of the club's traditions that has not changed in this virtual world is a toast we make to our country. If you have a drink nearby, join me in a toast to Canada. To Canada.
To Canada.
Now, I'd like to turn the podium over to Nicolas Marcoux, CEO and Senior Partner of PwC Canada, to introduce today's speaker. Over to you, Nicolas.
Thank you, Joe, and hello, everyone. As I welcome you here today, I am filled with optimism as we start to see things opening up around us. I'm also pleased to introduce today's keynote speaker, John Graham, President and CEO of CPP Investments. This is John's first public speech as the head of Canada's largest pension fund. He took on this pivotal role in the midst of unprecedented business, social, and economic challenges. I know that you are all looking forward to hearing more about John and his journey, the unique insights he brings to the role as a research scientist, and how he plans to navigate an evolving energy industry to build trust and deliver superior financial returns for Canadians. I think that we can all agree that the last 16 months have been the longest and the most trying times we've ever seen. Dealing with the pandemic, operating in a virtual world, shifting priorities, and the challenges it threw at us have put a different lens on how we view the world. It has changed the way we do business and has taken complexity and challenge to a different level. At PwC, we believe that organizations face two fundamental and frequently intertwined requirements: the need to build trust and the need to deliver sustained outcomes. This is true whether we're focused on ESG, data privacy, cybersecurity, diversity and inclusion, managing through disruption, or enhancing financial performance. Our recent 24th annual Global CEO survey indicates that 72% of Canadian CEOs are optimistic that global economic growth will improve over the next 12 months. However, Canadian CEOs fall behind global CEOs in their level of concern, risk mitigation strategies, and investments with regards to sustainability and their ESG initiatives. Clearly, we need to do more in this area, as very few Canadian CEOs have a clear plan as to how climate change will impact their business model. We collectively need to make progress on our respective ESG journeys, as this is no longer a nice to have, but a business imperative. And Amanda, I believe you discussed some of these issues with Bob Moritz, PwC's global chairman, on the Bloomberg market segment last week. So with that, I am pleased to introduce Amanda Lang, who will moderate today's discussion with John. Many of you will recognize Amanda. She's a renowned Canadian business journalist. She's an anchor with BNN Bloomberg and has been covering business news in North America for 20 years. She started her journalism career at the Globe and Mail and then the National Post before moving into television. She's also the best-selling author of the book, The Power of Why. Now it is my pleasure to hand it over to our two speakers, John Graham, President and CEO of CPP Investments, and Amanda Lang of BNN Bloomberg. So John, take it away.
Great, thank you, Nicolas, and good morning, everyone. And thank you to Joe and to the Canadian Club for inviting me to speak here today. 4 months ago, I was honored to become the president and CEO of CPP Investments, an organization that plays a vital role in the lives of Canadians. It's what drew me to the organization over 13 years ago when, as Nicolas mentioned, I pivoted from a career as a research scientist. The idea that I could play a role in contributing to the financial security of millions of Canadians was a really appealing proposition. When I joined CPP Investments, we were $100 billion of assets under management. Today, we're approaching $500 billion. And approaching $500 billion despite the challenges of navigating through the global pandemic over the past year. So this morning, for my prepared remarks, I'll touch on 3 topics. First, our recent financial performance. Second, how we are going to invest post-pandemic and navigate the global markets. And third, the pressing issue of climate change. So starting with our performance. And certainly 2020 felt like a roller coaster. Felt like a roller coaster, I'm sure, for many of us on the line here today, and not in a good way. In March of last year, the markets dived. Businesses shuttered across the country and businesses shuttered in our local communities. Many of our contributors, we are a pension plan. Many of our contributors lost their jobs and stopped working. And our global team of 1,900 people, we went from 9 offices to 1,900 home offices virtually overnight. And as the world navigated through this early uncertainty, certain bright spots began to emerge. The economic stimulus provided by governments and central banks was unparalleled. The markets stabilized and ultimately rebounded, and the calendar year was a very strong year for capital markets. The lightning fast vaccine development was extraordinary, and as an ex-scientist, to watch it from the sidelines was pretty amazing. And we're pleased at CPP Investments of our meaningful investment in Moderna, which we made just months before any of us had ever heard of the coronavirus. Yet despite all of this volatility, our fiscal 2021, which ended in March of this year, was great news for millions of Canadians. We reported our strongest ever annual results of 20.4% return. And I'm personally and exceptionally proud of our entire global team on how they delivered over the past year, overcoming immense mental and physical challenges of working through a global pandemic. Our organization never paused, very much leaned in over the past 12 months, and we reached $500 billion. And we reached that milestone 7 years ahead of when we were projected to reach it at the inception of the organization. But 1 year results, whether good, whether bad, are not our immediate priorities. We are a long-term organization, and we're very much focused on long-term investment performance. We often describe ourselves as a generational organization. We're here to invest on behalf of generations of Canadians. And whether you're a current beneficiary collecting CPP or a recent grad from university who's just made your first contribution to the Canada Pension Plan, our active management strategy continues to deliver strong long-term returns. Our 10-year returns are 10.8% net of all costs, and that's very strong long-term performance. And I'm proud to say it hasn't gone unnoticed on the global scale. Last month, the Sovereign Wealth Fund Institute ranked us as the top performing fund globally, as measured by our compounded annual growth rate. And to quote their 2021 report, Canada has only the 9th largest economy, but its pension system has proven to be one of the, if not the most advanced. Now, the fund's growth and superior returns over the long term reflect our commitment to excellence and the commitment to excellence that our team brings every day. Now, we are a purpose-driven organization. We are a purpose-driven culture, helping Canadians feel secure in retirement. And it's this purpose, this sense of purpose that really drives our success. Over the past 10 years, past 15 years, we've been very focused on building out our capabilities and building out what is today a globally competitive investment powerhouse. We have deep experience, a very deep experienced team that brings knowledge and expertise across a wide breadth of asset classes, geographies, and investment strategies. And that will be critical going forward, critical as we look to our post-COVID world and the investment opportunities. Our long-term strategy remains largely unchanged, remains largely intact. But we are carefully weighing the impacts of the pandemic with the belief that there will be permanent impacts from this pandemic. On a micro level, we are watching some of the trends that developed through the pandemic. Some of them were accelerated through the pandemic and will continue post-pandemic. First, we do believe remote work is here to stay. At CPP Investments, we will adopt a more flexible approach. We will adopt a more hybrid approach to the work environment. And with that will come challenges in building systems, building services to support a location agnostic workforce, to provide that flexibility. We're going to need new software. We're going to need new workplace technologies, but this also provides investment opportunities to CPP Investments. Another trend is the acceleration of e-commerce, obviously a trend pre-pandemic, and we can see that on the impact on brick and mortar retail, but it was very much accelerated through the pandemic. Last year, the Canadian economy shrunk by 5%, but the digital sector grew by 3.5%. And this has triggered exponential growth in cloud computing, the need for IT hubs that are more location agnostic, and an increased demand for high quality logistics infrastructure. And logistics is an area we've been keen on for years and been investing on a global scale in countries all over the world. These are just a few of the multi-asset class, multi-jurisdictional trends that we've been focusing on and understanding within our portfolio. Now, moving to the macro side, certainly as the pandemic recedes, and we all hope it recedes, big challenges and questions remain for the global economy. How and when borders will open, the ongoing impact of monetary and fiscal policy, how different jurisdictions will approach containment of the virus going forward. These are all things that we at CPP Investments need to incorporate into portfolio construction. But whether we are looking at the micro, whether we are looking at the macro view, what is increasingly critical right now for CPP Investments' success, and ultimately our contributors and beneficiaries' success, is the breadth of the investment strategies that we have built. We spent the past 10, 15 years building out our capabilities, and these capabilities can't be easily replicated. Now, we certainly take a one fund approach. We certainly think about maximizing the return at the total portfolio. And we do that by leveraging the expertise in the 24 distinct investment programs that we run within the organization. Now, this one fund approach is certainly what we're going to bring to bear now on one of the most pressing challenges facing the planet today. That's climate change and the global economy's path to net zero greenhouse gas emissions. Now, we are seeing progressively ambitious climate policies globally, innovation and new technologies impacting old and new economies, and changes in consumer and corporate behavior. And against that backdrop, our aim, CPP Investments' aim, is to capture the opportunities and to manage the risks that arise from greenhouse gas emissions as they're gradually removed from the real economy. We see a crucial role for CPP Investments in funding, in investing, and supporting this long-term and complex transition, the energy transition and the economy transition. And all of this is in the interest of maximizing returns over generations of beneficiaries and contributors. Now, we require companies in our portfolio, in both our public portfolio and our private portfolio, to have viable transition strategies. And we're holding them to account through our voting, through our influence, and through our governance. Now, we do believe that using blanket divestment will impede the world's ability to transition. And it's critical that we at CPP Investments continue to play a role in lowering emissions across the energy spectrum through a policy of engagement, through engaging with companies and not just blanket divestment. As an example, at the halfway mark of this year's proxy season, we voted against 44 directors, 44 director nominations at companies we determined did not show an appropriate plan to address climate change. Now, looking ahead, we expect to be a significant investor in this energy transition. Earlier this year, we announced the formation of our latest group, the Sustainable Energies Group, to build on our existing strength in conventional energy, in renewable energy, and innovation in technology. This group already has 20 billion of assets under management, and we expect it to grow. And we're quite keen to grow this group over the next few years. And their strategy will evolve as more information becomes available, as more transparency and disclosure becomes available, as additional transition pathways emerge. They will evolve their strategy as global standards to net zero emissions materialize. Climate change may very well be one of the defining challenges of the 21st century, and CPP Investments will be a key investor in the world's path to net zero. Now, in conclusion, as we emerge from the pandemic, the mood in Canada and abroad has turned from anxiety to cautious optimism to confidence. But we are also heading into uncharted territory. And as a global investor, we need to stay very alert. We are keeping a close watch on inflation expectations, on fiscal and monetary policy responses that have become somewhat less predictable, on real growth expectations that are diverging across the globe, and currency volatility, with the potential for a less stable currency exchange rate going forward. Yet amidst all this uncertainty, 20 million Canadians can take comfort in the knowledge that the CPP, the Canada Pension Plan, is healthy, is growing, and is sustainable for the next 75 years. So again, many thanks for the invitation today, and many thanks for everyone who joined us here virtually. And Amanda, I look forward to our discussion.
Thanks so much, John. And we do have questions already rolling in, as you might expect. Eager to hear from you on a whole bunch of subjects. And to our audience, keep them coming, and we'll incorporate them into the conversation as we go here. And John, I mean, there are so many places to start and so many big subjects. I want to start really with kind of the news, where we are right at this moment, which is to say, you talked about the uncertainties, you talked about inflation. We're sitting at this place where even Jay Powell, chair of the Federal Reserve, has to acknowledge they don't really know. We haven't been here before. There is no model for what's happening here. What's your biggest kind of thought about the level of uncertainty and what you fear the most now? Is it inflation? Is it that uneven growth you talked about? And when you look at the world today, what's your biggest concern?
Yeah, biggest concern, and as we're thinking about the globe, I think one of the first comments is, speaking internally, we're seeing a divergence that we haven't actually experienced probably for years, and a real divergence in how different countries have approached the pandemic, the amount of monetary, the amount of fiscal stimulus. And then as they've moved through the pandemic, the vaccination rates have been very different across the globe. And coming out of it, some countries have adopted a high vaccination rate, and hopefully we'll have more open borders. Others in other developed countries continue to have low vaccination rates, and how that will impact long-term growth rates is TBD. But as a global investor, in some ways we find this, somewhat, we see opportunities. We see opportunities for active management. We see opportunities to actually differentiate across different geographies, across different sectors.
And so just elaborate on that a little bit, to that differential. I mean, there is this feeling, and in fact, warnings from health officials, and then obviously, economic bodies as well, that we are going to see this very kind of spiky world for a little while. When you talk about the opportunities, what does that look like? Does that look like, looking at those places that may be lagging a little bit, but seeing ways that you can invest there as they come out of it? Is that sort of the opportunity you think of?
I think it's very much across the entire globe. And you asked a little bit about inflation and a little bit about what worries us. And I think inflation was something we spend quite a bit of time talking about. And maybe thinking more about the US and Canada and the inflation picture. Longer term, I would say our base case is we probably don't see runaway inflation longer term. We probably see inflation being a little bit hotter than it has been in the past, but just slightly probably above the target. So it's certainly not our base case that we're going to see runaway inflation in the long term. But as an institutional investor, it is a tail risk. It might not be our base case, but it is a high impact case. So we're spending a lot of time thinking about the impact on the portfolio of higher, longer term inflation. Now, in the short run, there's certainly a lot of pent up demand. And certainly a lot of pent up demand in Canada and the US. We have a high savings rate, and I think we're going to see a real demand surge coming to the back half of this year. And we've been investing in the US consumer for years and continue to be quite bullish on the US consumer. And in the near term, certainly expect that demand surge to lead to some interesting investment opportunities.
Do you have concerns or fears that the Federal Reserve particularly could get it wrong? I mean, as we all know, central bank error is really what causes the most recessions. In this case, do you think they're on the right track?
Well, I think as you mentioned, we are in uncharted territories. And I think the central banks, the Canadians, the US, they do have a lot of tools at their disposal and a lot of tools to work with. Whether we will come in and whether the inflation will run a little bit higher than historical, I think, as I said, that's probably, many people believe in the near term, that could be what we're going to experience. Longer term, I think we have confidence in the levers that the Feds have at their disposal.
One of the questions we got has to do with your own transition, but it gets to, this kind of, the question is, what was your roadmap in switching careers? It's a pretty interesting one. And did you have that as a goal? And as you answer, John, it sort of gets at this notion of, CPPIB is special. CPP is special. This is not just being a money manager. You occupy a kind of a unique position in this country, in the world. So what did it mean to you, and how did you land there?
Yeah, it certainly has. I've gotten a lot of questions about my transition over the past few months.
Mostly from data scientists, I bet.
Yeah, and I've always been a very big advocate of hiring people from diverse backgrounds and bringing people with diverse experiences, and obviously influenced by my own experience. I had a almost 10-year career as a research scientist, and during that time, did my MBA, did get some formal finance training, and got a call about an opportunity at an organization, a relatively young organization at the time, called CPP Investments. And as I mentioned in my prepared remarks, it was just really, I was incredibly intrigued, to have an opportunity to go to an organization where I could see the potential of the organization. You could see the trajectory, the growth trajectory, the opportunity to be part of something that was at one day going to be $500 billion and $1 trillion, which is amazing to think about. And then also the purpose of the organization, an organization that contributes to the financial security of Canadians. So the potential of the organization to actually create something that could be a real powerhouse on the global scale and have the purpose, it's a very unique place to work.
It is, and it brings with it, no doubt, unique responsibilities and challenges of which you would be aware. And they fall across the spectrum. I'm going to take some of them in turn as we go through here. We're getting questions about these as well. But one of them, you mentioned obviously sustainability. You have a new practice or investment group around this. Just in terms of the kind of dual mandate you have, if I can put it that way, I mean, you have a kind of a social responsibility to Canadians, to the world as a sizable investor. You also have a responsibility and a duty to generate returns. Your pensioners require it, and the actuarial tables require it. How do you marry the responsibility you feel on the social side, if I can put it that way, to the responsibility to just get the best return possible?
Mm-hmm. Well, I will say, though, we do have a single mandate. We have a single fiduciary mandate, and that is to maximize return without undue risk of loss. And we're here to contribute to the financial security of Canadians in retirement. So that is really the North Star of the organization and what we were created to do and what we will continue to do. Now, as we think about sustainability, as we think about building out our investment programs, we certainly overlay ESG, environmental, social, and governance into all of our investment decisions, into our portfolio management, into our asset management, because that's just good investing. And we just can't ignore it in today's world.
So one of the big challenges this country faces, and thank you for that reminder, you have a clear mandate. There is a kind of a subtext, though, right? For everybody in this country, everybody managing money, when you make an investment today, if the best return is, an arms company or a tobacco company, there are some pension funds that will shy away from that and use their assets and their voice to make a statement about it. You mentioned the transition and the fact that you want to invest in businesses that are committed to sustainability and transitioning. That's really important in this country. It's probably the defining problem of this generation, is how we take the country that we've known with such great strength and resources in energy and make a pretty sizable pivot. And a lot of people are afraid that we're not getting it right.
Yeah. As I said, the Sustainable Energies Group, it really is one of the groups I'm most excited about. And really one of the groups that, I believe can be a global leader and be a global leader in energy investing. And they'll continue to have the mandate to invest in conventional energy, invest in renewable energy, and invest in innovation and technology. And maybe touching a little bit on the conventional energy side and maybe going back to my science roots. Having done a PhD and it was in physical chemistry, I have lots of ex-colleagues and friends from my science days that work in the energy sector. Mm-hmm. And there is incredibly knowledgeable scientists and engineers in the energy sector that are going to play a critical role in this planet's evolution. And we have one great example in our portfolio in Wolf Midstream. It's a conventional midstream company. We actually seeded the company and founded the company several years ago, and they have a real expertise in conventional midstream. But that engineering expertise, that knowledge, it can also be applied to new technologies that'll help decarbonize the planet. And they're one of the developers and the operators of the Alberta Carbon Trunk Line, which is a carbon capture, utilization, storage line.
Where does it leave you with some of the big traditional oil and gas companies? We've seen sovereign wealth funds around the world simply saying we won't invest in the oil sands. What's the position at CPPIB?
Yeah, I mean, our view with respect to the energy transition, and I think we're trying to call it now the economy transition, because it is more than just energy companies. It is complex. And we certainly have a view that organizations and investors that take the time to really understand the transition and really understand the transition of the real economy will be rewarded. And a view that many of these energy companies will be leaders going forward. And the planet will struggle to transition without the expertise of the more conventional energy players. We also have an investment with Enbridge, and we have a JV with Enbridge for renewables, for wind in Europe and in North America, a $2 billion JV, and a great example of a company that has its feet in both camps of conventional and renewable energy.
Do you think that the policymakers in this country are on the right track to be supportive of investment clarity? In other words, a lot of both companies and investors, it feels a little bit like they're in front of governments in terms of trying to figure out where this is all going. Do we need more clarity about Maybe it comes out of COP26. Maybe it's an update to Paris, but whatever it is, that you investors know exactly what the stakes are and the terms will be.
Yeah. So, with respect to policy, we leave policy to the policymakers, and but certainly within the broader energy transition and the broader economy transition, the more disclosure, the better. The more transparency, the better, at both a corporate and a government level. And we have been a big advocate, and it's one of the things that we are using our influence for, is to improve disclosure and improve transparency. Because as an investor, this is how we can make informed decisions.
We do, and maybe this will go back to, you've got a clear mandate and that's maximize returns. Over time, there has been a view that pension funds in Canada using Canadian tax dollars and Canadian savings should invest in Canadian companies. You've been freed from that, and that's probably a very good thing given your size. But should there be a kind of a tilt towards Canada for all pension funds that are Canadian pensioners? Should you be investing, not mostly, but should you be looking to Canada as a source of strong investment?
So we have about 15% of our assets in Canada right now. So at $500 billion, it's still 75 billion of assets invested in Canada. Canada is about 3% of the global GDP. So we continue to have a pretty sizable investment within the Canadian market. And we come back to our mandate. We come back to really what we're solving for here, and this is to contribute to the financial security of Canadians in retirement. And we look at opportunities in Canada, but we also look at opportunities across the entire globe, with a view that part of providing that security is ensuring we have a global, diversified portfolio.
And how might that portfolio change or shift as you look ahead post-pandemic? And kind of, I guess I would throw into the mix there, you might have been thinking along the lines of a shift before the pandemic. The pandemic added some interesting complexities, but was there going to be an inflection point for you where you were starting to think about a different mix of assets?
It's very much the strategy is intact. I've been with CPP Investments for quite a while, and certainly I've been on the senior team for a while and have had an influence on the strategy, and been very much one of the architects of our current strategy. Big believer in diversification, big believer in over the long run, having a diversified portfolio will help provide the right risk-adjusted return to our contributors and beneficiaries. Very big believer in having the global capabilities. And that's something we've really been building out over the past 10 years with our 9 offices, to have deep understanding in markets across Asia, across Latin America, across Europe and the US, and building out capabilities in the alternative asset space, in private equity, infrastructure, real estate, credit. So these are very much areas, being global alternative assets. These are areas that we're going to continue to lean into.
Do you feel as though the portfolio is kind of risk-proof enough that if there was a major market downturn, if we saw a major correction in equities, that you'd feel pretty comfortable with the mix you have?
Our portfolio is very well diversified by geography, very well diversified by asset class. And one of the things that we've been working on for the past few years, which we had it in place prior to the pandemic, and it was fantastic, is an integrated risk framework. We really have been building out our risk management capabilities over the past 4 or 5 years, including a lot of stress testing, including doing war game exercises, including really understanding how the portfolio and how the organization will behave in different scenarios. And that actually served us well. I think one thing that I would really highlight through the pandemic is the portfolio behaved as we expected it to. It's less volatile than the broader markets. It didn't go down as much when the pandemic hit, and it doesn't take the big swings to the upside. It's just more diversified. But also the operational excellence within the organization, that the organization was able to transition from 9 offices to 1,900 offices overnight, and really didn't miss a beat.
You referenced some of the thinking and learning of the pandemic and the way you work, and that what you'll take forward. What do you think are the most important about the way your teams work and how that might shift? Because it's interesting. It's been interesting to watch some of the biggest financial firms the Goldman Sachs of the world, the JP Morgans, kind of saying back to work you go. It's a bit of a mixed bag, but there is a kind of a sense that, big finance wants people back at their desks. What's the approach at CPPIB?
Yeah, it's something we're spending a lot of time thinking about, and something we have to get right. I think organizations proved over the past 12, 16 months that you can work remotely. It actually largely worked, and productivity went up. At least it went up in the early days of the pandemic. And this flexibility that provided people in many ways is very well received. And it's something that we want to continue to offer, that flexibility. Now, on the other side, we are missing the human interactions, right? Those human collisions that happen randomly in the office. So what we're thinking a lot about is this hybrid model, having people in the office to ensure we have the human interactions, to get the creativity, the ideation, the innovation, just those human collisions that create the culture of the organization, and then having that flexibility to work from home. So also really think, like, when you come into the office, make sure we really lean into those behaviors that promote the culture, that promote that collaboration.
Is it changing your thinking as a team or within certain groups about things like commercial real estate? I mean, do you think, are you taking a wait and see approach, or are you actually kind of starting to make assumptions about how we'll use certain spaces and assets in the future?
Yeah, I mean, I would say with respect to commercial real estate, with respect to office, it's certainly been our experience through the pandemic that it's actually weathered the pandemic quite well. Our portfolio has actually done reasonably well, and tenants have continued to pay the rent. We still continue to expect, and we continue to see demand for top quality office. And our team has built a pretty high grade portfolio, and it has actually performed pretty well through the pandemic.
Some kind of Canadian specific issues that are top of mind. And one of them is housing. We know it's been an issue. It's gotten worse through this pandemic. It includes all kinds of issues, obviously, of inclusion and inequity, affordability. What kind of investments do you make in the space in general? And do you have a thought about where we are in an overly speculative market or not?
Yeah, well, so with respect to how we invest in the Canadian housing market, we actually do not invest in the for sale single family homes. It's not a market we've entered in. It's not a market we participate in. Where we have participated in, including our recently announced JV with Tricon, which is bringing, I think, around 800-900 rental units into the Toronto market, is the development of rental units. And that's a market that we see as being interesting. And I think one that is actually aligned with some of the overall goals of getting more units into the market, and replacing some of the older buildings with newer buildings, and providing some additional rental capacity into the market. With respect to the pricing of housing market itself, that I will defer. I think there's people that are far more knowledgeable on that than me.
Or anyway, more zealous about it. However, as much as those of us who aren't fortunately in the buying or selling right now can just sit back and say, I'm glad I'm not doing that, it is obviously a policymaker's issue, because it has a huge economic consequence if we get this wrong, if we allow a speculative market to correct. Do you worry about that at all in Canada in terms of what you're seeing and what it might do to the overall economy if the froth continues too long and it's, there should be a shock of some kind?
I think as an organization, we don't have a lot of exposure in the portfolio. We don't have a lot of exposure in the portfolio because it's not a market that we've been investing in any way. And with respect to any broader contagion across the Canadian economy, I'd say it's not something that we have been overly concerned about to date.
One thing that's been interesting to watch is the Canadian dollar at these high levels that so far doesn't seem to be crimping our exports. We hope that it doesn't. In terms of where currency plays a role for you, what do you do with currencies in the portfolio, and what's your thinking around whether hedging or not hedging is the right way to go?
Yeah, and on that last point, I mean, we're talking more about currencies now than we have in years. And as we're seeing differential inflation expectations, we could see additional currency volatility. So it's definitely something that's top of mind for us. But as an organization, we don't hedge our currency because of who we are. We report in Canadian dollars, and we're here to provide Canadians with Canadian dollars. And most of our assets are invested, as said, 85% outside of Canada. So when the Canadian dollar strengthens, it does put a headwind into our portfolio, as it did last year. As the Canadian dollar has been strengthening, it does impact our returns. But we do see currency is actually reducing the volatility of our portfolio. Canadian dollar is typically strengthening when the markets are doing well, typically strengthening when commodities are doing well. And so we're seeing generally positive returns across the broader portfolio. Now, the Canadian dollar has historically declined when we see declines in the broader markets, when we just see declines in commodities. And that's actually provided a bit of a natural hedge into the portfolio. And we saw that. We have a March 31st year end. So March 31st, 2020, really right at the beginning of the pandemic, we saw that benefit of a declining Canadian dollar. So to date, we've made the decision not to hedge, and with a view that it actually does dampen the volatility of a global investor that has its pension liabilities in Canada.
Interesting. One of the other kind of top of mind issues, and we have a question from our audience about this, is the increasing risk of cybersecurity and ransomware. Obviously, some really high profile attacks recently. Where is that in your thinking, and what you do about it?
Yeah, that's a great question, and something that is top of mind. I know it's top of mind for our board of directors. It's top of mind for the management team, and it's top of mind for us as an investor in our portfolio companies. Within our private companies where we sit on the board, cybersecurity is at the top of the agenda, and ensuring that every company has the appropriate plans in place. And it's something that, as an institution, we actually just recently hired a new head of cybersecurity for CPP Investments.
Do you find that your investor companies are doing what you would hope on this front, or is there kind of a steep curve? This is not a new subject, we should say, John. We've all known about it for a long time, but it's a bit like flossing, right? We really don't think about it till we're about to go to the dentist. Speaking for myself, are companies on the ball in the way that you want them to be?
Well, I think they need to be. And in many of our portfolio companies where we do have significant governance rights, we put it at the top of the list. We put it at the top of the agenda. So it might be a lower probability event, but it's such a high impact event that we definitely need to ensure we have the appropriate risk management in place.
We have a few different questions around your thinking on ESG. And a couple of them really asking the question, which is so relevant, of course, for both investors and management today, which is the E is sort of the easy part, and there are increasingly easy ways to benchmark and measure how folks are doing on getting to net zero. Social and governance can be harder. Equally important, of course, issues in their own way. How do you measure them? What does your team do about creating kind of benchmarks around things that are a little bit less qualitative?
Yeah, they're equally important. Obviously, climate change and the E is such a big topic these days. But the social and governance is also an area where our teams are very much focused, and very much focused that boards of the companies we invest in have appropriate policies, have appropriate procedures in place. Just as one example, and we're similar to many other Canadian institutional investors with respect to gender diversity and promoting gender diversity on boards. And we use our votes in our public portfolio to encourage and really expect greater gender diversity on boards. And through this voting season, we've actually voted against over 300 director nominations where we weren't satisfied with the level of gender diversity on the board or the management team.
There have been a couple of questions here, and to be honest, I'm not going to challenge on you directly because I don't know the answer, but suggesting that CPPIB could do better on diversity and inclusion. I haven't pulled up your org chart, so you can tell us if you feel like that's a goal that you do need to tackle, whether there could be a better push there internally.
I think organizations should always be pushing and leaning into it. If we go from our board of directors, our board of directors, we have strong gender diversity on our board of directors with majority female on the board. As we go to the senior management team, we do have gender diversity. And I think an area that we need to continue to lean into is getting more gender diversity into our investment programs, and especially in the senior ranks of our investment programs. But we are making progress. When I took over the credit group several years ago, I think we were at 20% women in the group. And when I took over this job 4 months ago, we were at 44% gender diversity within the department. So making progress, but not quite at parity yet.
And of course, as we all know, gender diversity is maybe sort of 2015's problem. One of the big issues many organizations face is inclusivity that includes racialized groups, vulnerable minority groups. And I can only guess that if you were hiring and you could hire a diverse candidate, you absolutely would. There's a responsibility, some would say, for organizations like yours, all the way down the food chain, to promote the development of talent, of racialized, of minority groups. What is your role there? And I put it that way, John, because I would say it goes beyond hiring. Hiring is the easy one. If you can find them, you'll hire them. I guarantee it. How do you make sure the candidates are there for you?
Yeah, I actually sat on a panel a couple of weeks ago, and this was one of the key topics. Is it's not just about recruiting; it's about developing, and it's really about providing career opportunities. And I think, as an organization, this is something we spend a lot of time thinking about, making sure that people come in. And I mentioned earlier, I came in with a different background and didn't have the actual experience of a lot of my colleagues. I came into the organization as a 36-year-old associate, and I think most associates are around 25 years old. But the organization, helped develop me, gave me opportunities, gave me stretch opportunities. And as I look at bringing in a diverse community into CPP Investments, we got to really lean into that, lean into both the formal, the informal training, the apprenticeship, the mentorship, and the sponsorship. And the senior team really demonstrating leadership there and helping develop that next generation of professionals.
And those are structures that are, I would imagine, easy to put in place internally. Do you look for that in investor companies? Is that the level of detail you can ask for companies that you're actually putting your dollars into?
Well, certainly on the private side, and I've had the opportunity to sit on a couple boards, and ensuring that these companies have strong DEI policies is key.
We have a question here about the main drivers of growth and challenges in 30 years. So looking ahead just a little bit, but if there's a group of people that have to look ahead, it's a big pension fund. When you guys are mapping out the long term, what are the growth? What are the challenges?
30 years. Wow, that is that is long term. And I'd maybe make a couple comments here. And obviously very challenging to forecast out 30 years. And one of my actual investment beliefs of what one of CPP Investments' real comparative advantages is the breadth of the strategies we run. We have 24 distinct investment strategies, and we have the ability to allocate capital in a somewhat agile way into these different investment strategies. So we don't have to put the train on the tracks and hope in 30 years it pays off. What we have is actually a lot of diverse strategies and the ability to dynamically adjust the capital allocation to these strategies.
One of the big, I guess, turning points, it may not be 30 years, and maybe we could pull it a little bit closer perhaps, but the kind of China question. For a long time, that was simply, there's opportunity there. We need to be there. We need to be investing there. There's a shift in tone in the world, perhaps led by the U.S., John, but Canada's and investors are going to have to figure out how they want to manage through what might become a very polarized world, the U.S. on one side, China on the other. What's your investment strategy there, and how pro-China will you be as an investor?
We will continue to be pro-global, and we'll continue to be a pro-global investor for a lot of reasons, including emerging markets. We'll continue to be pro-emerging markets. And it's the right thing to do, and it's the right thing to do for generations of Canadians. One, it provides diversification. It really provides diversification into the portfolio. And as the portfolio grows, that's one of the key, in many ways, risk management tools we have is diversification. These are big markets. You look at emerging markets, these are big markets today, and they're growing faster than many of the developed markets. And we need to be able to tap into the drivers of global growth. So we see an opportunity to invest in some of the industries, some of the companies that are driving global growth. As in three, as they are big economies, it just opens up and provides a broader opportunity set. So it provides a broader opportunity for value added. So we're going to continue to build out our capabilities, continue to build out our understanding, our infrastructure, our relationships in the global markets and emerging markets. But I just emphasize how we do it is really important, and how you do it is really important, who you partner with, what industries you invest in. These are the things we spend a lot of time thinking about.
And is anything changing for you in your thinking in those relationships if we do see a kind of a hardening against China by other countries that will probably include Canada?
Yeah, again, the how is always evolving. We actually have a very dynamic way of thinking about how we invest in these different countries. We are a long-term investor, though. It's very challenging to come in and out of markets, come in and out of partnerships, but we are always keenly aware of the geopolitical risks around the globe, and how we invest, and what asset classes and what partners we have.
What kind of ambition or a commitment do you have at the venture level, which I know can get harder and harder the bigger you get, but so important for, especially in the Canadian market, and I guess let's say at that level, but also for Canada?
Yeah, it's a great question. And I think this is an area that we've actually, maybe as we've gotten bigger, we've kind of increased the sophistication of our approach. And we started a VC program a few years ago, and we're continuing through different groups within the organization, our thematic investing group, even our energy group, looking at venture capital, looking at growth equity. And for me, what's important here is to have a real balance in how we think about the market. Historically, we probably focused very much on the more traditional part of the equity markets, and just have more balance between the early stage venture capital, the growth equity stage, and some of the more mature companies.
And is there a kind of a dollar figure you assign to that, or this is just a kind of a developing idea that you'll focus more?
Yeah, I mean, we have over $120 billion in our private equity program, and we don't have fixed allocations in private equity. The VC program is smaller right now, but as we've seen with these companies, right, there's an opportunity to invest when they're smaller, and in every round continue to grow with the company. Mm-hmm. And we've seen other organizations, and we've been successful on it a couple, where we can invest and continue to grow with the company. And so the one I mentioned in my prepared remarks with Moderna, when we made that investment, we'd never heard of coronavirus.
I want to just share a question that gets to, it's partly your transition, right, inside the organization and taking on such a big leadership role. But you're probably pulled in different directions in terms of supporting the strategic goals of CPPIB. But how do you split your time between internal, leadership team, stakeholders, and then the big picture thinking around strategy and creating goals for the fund?
Yeah, and it's came into the role 4 months ago, so it's probably still working on it a little bit. And certainly my priorities in the first 4 months have been, one, to spend time with the internal team and to really focus on the internal team, and two, spending time with some of our key Canadian stakeholders. Because of, as you mentioned earlier, the role we play in Canada, the importance of this organization in Canada, I've really tried to be very present within the Canadian market over the past 4 months. And the three things that I really try to spend time thinking about are the culture of the organization, the strategy of the organization, and ultimately the allocation of resources and how we spend our time as an organization.
One of the things, of course, that scientists do naturally is think about what they're getting wrong, what they're not seeing, the other side of the equation, if you will. What's your, having spent the time that you have at this organization, it intimately, what is the kind of category of second guessing you might do around things you keep checking of making sure you're on the right track?
Yeah. Well, it's a scientific method, right? You always try to prove your hypothesis wrong. I think the one thing as an organization that is really important for us to always do is to just keep moving forward and keep pushing forward. This organization, because of our mandate, because of the resources we have, really can be a global powerhouse. And this organization can never be complacent, and it just needs to keep pushing forward and keeping pushing forward on a global scale.
And what's your vision for it when you think about, what I guess your own growth for the organization, but also for yourself personally as you take the role on? And as you say, it's early days, but what's your kind of goal?
Well, maybe I'll say the goal for the organization, and which is very much where we are today, is to be that organization that all Canadians are just incredibly proud of, that this organization can be a powerhouse on the global scale. We already are today. The Canadian pension system is in many ways the envy of the world. And our organization is one of the great Canadian pension plans. And so the goal really is in those areas where we choose to be a leader, in those areas where we choose to be a global leader, that we are just recognized that way across the globe.
And what keeps you there? You have a lot of partnerships. It's one of the things you've done as you as an organization, as you've gotten bigger, is developed investment partnerships so that you can outsource some of this work. That means you're also in some ways outsourcing a bit of your culture and strategy. How do you keep your arms around what CPP is in the world?
Yeah, well, you keep pushing forward. And what's the book that only the paranoid survive? But maybe it should be only the paranoid thrive, and just keep moving forward and keep trying to stay ahead. And I think this organization has been one of the leaders in the institutional investor space. And certainly over the past few years, we see many organizations emulating in the strategy, and we just need to keep moving forward.
So I think we should finish with a kind of a looking forward beyond the pandemic, because there is a kind of debate in the world, and it's a bit existential, but for investors, it's a very real one. And that is, do we head into a very expansionary, roaring 20s, kind of full of optimism period? Or will this be a period where some of the inequities and some of the disparities you talked about really are laid bare, and we it becomes a very kind of disjointed period and dislocations? What's your view? Are you optimistic or pessimistic?
I'd say generally optimistic. Certainly believe the back half of this year, you'll see a lot of pent up demand coming out into the market. But many of these issues that you highlighted are certainly top of mind, and certainly issues that investors need to keep in mind as we start looking 2-3 years out, with the disparity in the balance sheets that people have coming out of this. And these are all things that investors need to keep top of mind.
But feeling good? Are you feeling good personally about where we're going?
Yeah, and we're generally feeling good because, again, I'll come back to the breadth of the strategies we run. We're feeling good because of the optionality we have in our business model, right? And that we can invest across so many different geographies, so many different asset classes, so many different industries. And I think active management, and I think the leveraging this breadth is just going to be critical going forward.
It is great to have you with us, John. I'm gonna, on behalf of the audience, who I know has really enjoyed this, thank you for your time, taking time with us today. It was great. Really appreciate it.
Well, thank you, and thank you for the invitation.
And with that, we will turn it back over to Joseph.
Great, thank you, Amanda. Thank you so much, John. Guests, thank you for spending your lunch hour with us today. John, thank you for joining us and sharing your journey from research scientist to head of Canada's largest pension fund investor. I was particularly struck by the micro challenges and opportunities that lie before CPP Fund, and how the pandemic has truly brought even greater contrast and urgency to really unpack the topics like ESG in your agenda. CPP is a lighthouse in the pensions and investment world, and we wish you every success in this new role as you lead the fund and help ensure sustainability and great success for generations. Amanda, our thanks once again for bringing your expertise to our podium. There's clearly strong interest from our audience in the role CPP plays in society in this transitionary phase for Canada and Canadians. We are always grateful when you can join the conversation. Sincere thanks to PwC for sponsoring today's event. Our event would not be possible without our sponsors, so thank you for your continued generosity. Thanks to our AV supplier, Van Valkenburg Communications, and livemeeting.ca for making it possible for us to come together virtually today. Guests, thank you for joining us. This was our final event of the season. In a year like no other in the club's 124-year history, we appreciate your unwavering support for our programming and mission to engage Canadians in what matters most. Stay healthy and safe, and I look forward to seeing you again in September.